All right, let's get into a little chit chat now about support and resistance. And I want to just apologize up front. I might get extremely emotional and crazy, really excited talking about support and resistance. And this kind of goes back to many years ago when I was a struggling trader. I didn't have any process whatsoever. It was like dart throwing and just really guessing. I just did not have a process. And when somebody showed me support and resistance, first I felt like an idiot. I can't believe that something that is so easy. I mean, guys, this is going to be like one of the easiest things that you'll ever learn. And you probably already know quite a bit about it, but we're going to talk really deep about this subject. I just couldn't believe that something so simple worked so well and was so reliable. And I mean, isn't that really how life is? It's like the most simplest things are the most beautiful in life. And for me, support and resistance was one of the defining things in my trading career that just turned it around for me. I was just stunned. And still to this day, 15 years later, I can't believe it. I'm in shock. It's just like, wow, I just can't believe it. So you might hear a lot of excitement coming out of my voice. I apologize up front for that. So as I talked to you a little bit earlier, technical analysis allows us, really defines important inflection points for us. And stocks, they just don't normally change direction. I mean, occasionally, yeah, they will. Nothing is perfect, but normally a stock does not change a direction or pivot at a certain level and then trade right into another level just because it wants to. I mean, there is a very specific reason that a stock trades like that. That a stock moves from one price, like from support right into the next resistance, or right from resistance back down to the next support. I mean, there's a reason that stocks do that. And this is where it comes in handy for you. It's more than handy. I mean, this is what makes the difference for you as a trader. Is, let's use this as an example. How many times have you been in a trade and as soon as you get into it, it makes a pretty good move? I mean, you get a nice little pop. And the first thing you think of is should I sell it? Should I get rid of this stock? Let's say you buy a stock and it pops 30 or 40 cents and you're like, ooh, should I take this money? And then it jumps 30 cents and it just stops. And it just starts trading in this really tight 5 to 10 cent range, for example. And it does that for like 30 minutes. And as it's going back and forth between this level, you start to get really frustrated. You start to get impatient, and you got that little devil trader standing on your shoulder, like poking you in the neck, like, hey, sell the stock, sell the stock. It's going to be a loser. It's going to turn into a loser. And the longer it stays in that consolidation, it's bouncing back and forth, the more it starts working on your brain, and you start to second guess yourself. You're looking at that gain. It kind of looks pretty good. Maybe you've had a really, really tough day. The last couple of trades have been losers, and you got this kind of okay win. It's not great, but you got this okay win, and you're battling back and forth in your mind as to whether or not you should take this. And as I said, the longer it goes on, the more it works on your brain, and then finally you're like, you know what, I want to take it. And then you get rid of it, and 5 minutes later, the thing just shoots up another dollar or so, and you left a few $100 on the table, and it was like this big defining trade. I understand, man. I'm not calling anyone out because I've done this. I can't tell you how many countless times I have been in that situation, and every once in a while I still get into it. But what I want you to understand is, if you're one of those traders who has very little tiny bit, little small itsy bitsy gains, and then you have really huge losses, or as soon as the stock goes into the green for you, your impulse mentally is to just take that money. Like, I got to get the money, I got to get the money, right? You just can't settle down. Most of the reason that happens, or reason if you have that kind of a problem in your trading, and you're getting shaken out in these trades, or you get into a trade, even if it didn't pop, let's use this as an example. Even if it didn't bounce in your favor, just kind of slid a little bit into the red, and you were like teeter-tottering between red and green, green, or a little bit in the red. You know what I'm saying, right? And it's working on your brain. The reason that you get shaken out like this, or the reason that you have little tiny gains and huge losses, or the reason that you can't be patient with these positions, is because You haven't been able to identify the high probability area that the stock you're in is going to trade to. You are not looking at the most likely target because a stock, let's say you're bullish, and for example, we're trading a stock that wants to go up. It's unlikely that the stock is just going to go, you're going to hit the button, right? You hit the button, boom, stock goes straight up in the air, and you're all good. $2 move, you cash out, winner. Yeah, you're going to get those, but when you think about your trading, I mean, how many of those do you get that you just hit the button, you're immediately in the green, and you're banking? You don't, right? You just don't. Most of the trades they're going to screw with you, right? They're going to bounce around, they're going to move in between these levels, they're going to shake all over the place. And right now with all these algos in the market, you're going to get some wild moves like a really big red candle and a big green candle. There's going to be all of these little tiny fake out zones. And this is what causes traders to lose not just focus and concentration, but this works on that psychology. We're going to get deeper into psychology later in this DVD, but that's what starts to wear on you. And you take out the money, and then a lot of times this costs you a very good trade. And in reality, what you have to do now is you now have to go find another good trade, right? Now you're increasing your chances of losing because you were just in a really A-plus quality trade, but you kind of wussed out. Again, I'm not calling anyone out. I've been there. That's how I know. I've been sitting in these shoes for many years before. I know how this works. So the reason that happens in most cases is because you're unable to identify that level. And with support and resistance, to me, and I'll show you, it will give you a lot of clues to help you prepare far in advance of how this works, of where these targets are, how to kind of recognize what a shakeout is, how to know whether or not the stock you're in gives you the opportunity for a much larger gain, and so on. Also, what it's important to use, because when I showed you all of the charts, I showed you 5-minute charts, 1-hour charts, daily charts. It's important to understand that support and resistance, as well as any indicator that we talk about, I should touch on this. The longer that you go back into time, the deeper that you go back into the time, the more important that support number, that resistance number, that level, more important that is. So let's say, for example, a certain stock is bouncing or holding a $50 price point. And it's been doing that for the last 3 hours. It's been going straight across, right around 50 for the last 3 hours. It's just sitting there. Not only this, when you're judging this particular level, well, let's just say like it's been holding that for 3 hours, and that's the only 3 hours it's been holding 50. Let's try to clear that up. So it's just been sitting there at 50 for the last 3 hours, and the stock was trading at 45 yesterday. Just kind of gaps up 50, and it holds 50. Now, certainly that 50 becomes an important area, and it's one that should be recognized. But in reality, it's only been holding that level for 3 hours. Now, maybe, like I said yesterday, the stock was trading at 45, and it held above $45 for the last 8 months. So if it held over 45 for the last 8 months, the 45 is a much more important support level than the 50. Now, of course, maybe while you're trading, like you're a day trader, maybe 45 is not going to come into play the day you're trading. So 50 really is all you have. So the 50, hopefully I didn't confuse you there, but the $50 is only a 3-hour or 4-hour support, or development of support, or establishment of support, or maybe the 45 went back 8 months. So the 45 is so much more important because it's established itself over a longer period of time. So again, if you're a day trader and you're making a trade, that 50 could be a good enough level for you to manage risk. But say if the stock was to lose 50, it was to sink below 50, it just could be a small fade that day. It just could be an algo or a stop trip bar or something like that. It just flushes out 10 or 15 cents and then bounces up. Now, let's say it would ultimately test 45 that day, which would be a pretty big move, but let's just say hypothetically it would test 45. If it were to ever lose 45, most likely, in most cases, the consequences would probably be far more drastic than it losing the short-term support level from 3 hours old. So I think I've kind of made it clear there. Always remember that if you're looking at longer term data with support and resistance, it's going to be a lot more valuable. Going back to when I was showing you the charts, that's the reason for the multiple time frames. Like, I'm just going to throw this out here. It'll make a little bit more sense later to the newer traders. Is that if I'm trying to trade a breakout, for example, and we use $50, if that $50 is breaking out on my 5-minute chart, which was on top, and then I glance down and I see that that $50 is also a very important resistance level on the daily, those two time frames would match. And the fact that the daily chart, maybe this thing was using 50 as resistance for the last month. Now I know if it breaks 50, not only would it be a good trade normally standalone on that 5-minute chart, but it's probably going to be a lot bigger move, because now we'll be clearing resistance that's really been a hurdle for this stock that might go back 1 month, 2 months, 3 months. And again, the further you go back, the more important this is. If it's a year, this could be one huge move. And you as the trader, which you will learn, just going to kind of touch on it real quickly here before we move on, what you'll learn is this will help you develop where your risk should be, how much position size you should allocate, and the quality of the trade that you're in, because you'll learn not all breakouts are created equal, not all time frames are created equal, not all support and resistance lines are created equal. There is a difference in what you are seeing, and us as traders being able to recognize the level of opportunity allows us to gauge the level of risk, and ultimately does the number one thing for us, makes us some bank. So let's take a look at this, how this works in real time on a chart. Take a look at a couple of charts so you just get a good feel of how support and resistance works. Okay, now we'll take a look at just simple support and resistance. And what I want you to remember as we're going through this, that it doesn't have to be 100% perfect. Remember at the very beginning of the technical analysis, I said it's just a reference point. It just puts a spot on the chart, like putting a thumbtack like they used to do in the old days on the mat. Just pinpointing an area where you can make a decision. We don't have to get to the exact penny. We can't be that perfect or expect that much out of ourselves. It just gives us an idea of where a stock might trade to. It helps us manage the risk. It will let us know. Sometimes it'll even help us keep us out of a trade. If you really want to buy or you really want to short a stock, support and resistance will give you an idea of whether you should go for it now or whether you should wait. And we just want to keep it simple, no other indicators on the chart. And the easiest way to do this is start from the nearest support and resistance levels and then work your way back. So as a day trader, let's say I want to trade this EGRX. We're going to look at a couple of the levels here. And just while you're new at this, if you're kind of struggling with it, or you've been in a while, you just want to reconfirm how good this works, just draw you some lines on the charts. Once you learn how to draw them, we'll show you here. Just draw them out. Pick you 3 or 4 a day. Then go back at the end of the day and see how these stocks react at those levels. And that's what we're really in it for. We want to see how they react at those levels. So we'll start with just the highs of the previous day, and then we'll trade it into this day. Or we'll do some thinking trades here. So we got the high of the day, which is roughly around this, let's say 73 area. And just draw these out as far as you can, but I'm just going to go as far as I can here. Again, they don't have to be perfect. And you got a little bit of short-term support right here. And as we discussed, this is very, very short-term. This is a very, very short-term number, at least now it is. And this is a very, very short-term support, right? Because you're only going back maybe 2 hours here of a range. Now we want to go a little deeper, so we'll go back down into this pivot that was a little longer back in time, but still that previous day. And then you'll get down into some of these levels here, which was around the opening price of that day. And then maybe kind of walk back over here and look for this, which is a couple of days prior, 2 days prior. This is actually a 2-day viewpoint of the chart. And now you got somewhat of a range to work with. I know it kind of looks messy, and as you progress through this, you won't need to draw these lines. You'll just be able to see this with your eye, as you will a lot of these indicators. You won't actually need to draw them out. You'll know, you'll be able to see it, but just for reference. So you've got a few areas here of numbers. So rather than just saying you're a buyer or you're a shorter of this EGRX, you have levels that you are interested in doing business. So for example, if we were to break out above 73.34, then I would view this as a potential breakout chart. Now the question for a trader would be this: if you were going to buy this stock, the first thing you would have to do is assess how much money would I be willing to risk in a trade, right? I mean, that's what all of you want to know. It's like, how much am I losing? How much am I going to lose if this trade does not work out? That should always be your first thing, is what is my risk? So if you are to buy this, let's say 73 to make the math easier. If you are to buy this at 73, your risk would have to be all the way down here at 71 at this last support, because it could easily just flush back into the support and then bounce again, right? How many trades have you been on? Like it popped, you bought it, it sunk, and then you lost money, and you looked at the money, you said, hey, that's too much money for me to lose, and you sold it, and then it just bounces off that level and goes higher. You'll see that, and I'm sure you've been in those trades. I have too. So the first thing you can kind of think of, just common sense will tell you, well, if that's going to be your risk, we've already determined you got about $2 worth of risk just to take this trade. So if you just drop 100 shares on this and you're wrong, bye 200 bucks, right? So that's pretty wide. But is it worth it? The next thing would be to look at the next resistance level. Like if it was to clear that 72, 73 level here, if it was to clear this, where would this thing go? Well, your next area is this right here. I'll try to draw for you. Right here. Right? This little high, roughly, I'm making a mess out of the chart, but roughly around the mid 74s. Okay? So you're looking at about a $2 move. You know, if it's going to break out, there's a good chance, maybe not all in one move as quickly as we would like it, but the chances are that it will trade into the next resistance. It's not a guarantee, but there's a good chance that it might get back up here to this high. All right? The thing you now have to assess is your risk to reward. Now we'll talk a little bit about this later as well, but you're risking $2 for a possible $2 gain. To me as a trader, real quickly, I can tell you that's not very acceptable. Right? You're 1 for 1. A good trader should be minimum 2 to 1 or 3 to 1. Now you're not always going to get that. You're going to spend a lot of time just taking scratch trades and trades that go nowhere. But you should always at least try to focus on that, because that puts the risk to reward in your favor. Because if you're taking too much risk, then your losses are far outweighing in any of your gains. But again, that's a deeper topic we're going to talk about. But at least here as a trader, you've got a couple of levels. It's a possible bullish chart at 72.98 or 73, and you could break above 74. Now, if it gets to 74, you'd have to look at the next level. If it blows through 74, then maybe it's 76 or 77. You can easily find that out in the chart. Now, we know that down here is the support. So on the flip side of that, if this stock is to lose this little bottom area, let's say at 71, to make the math easier, the next area of support is all the way down here at 68. Right? So there's a good chance that if it breaks that level, that this has a high probability, or at least should be considered, the next level of support. Right? So right now you could probably think how easy this is to use and help you clear up your decision. So like, let's say you're a trader, you're just going into the market, you have no idea. At least this way you have an idea. You've got some numbers. Possible breakout here at 73. It's not really a great risk to reward trade, but maybe it'll set up a little bit better intraday. We know that level. Possible short trade. Possible short trade on breaking this 71, because this 71 is a short-term level. Now certainly the short trade would be more appealing, because if it breaks out, then you go from possibly 73s, right, into the 72, 73, you get $2. But the downswing could be about $3 to $4. So there's a lot more room on this to the downside if it breaks this level for profits. So a little bit more risk to reward, but we'll take a look and see how the chart works. Now, As it goes deeper, if it gets down into the 66.53, these are much deeper, right? We're going back further in time. So you go here, the 66 is much more important than 68. 68 is much more important than 71 because they're further back in time. And you can always take a snapshot. I like to do it right down here at the bottom, highlighting that area again. If you look just right at the top of a couple of these last few days, you're right there in that 73, mid 73 level, which is just right about here where this breakout is. This is a pretty important level if it's able to clear it. Again, what you do want to know as a trader, the important part is if you are in this stock and it gets there, you at least know, no matter whether you're short or long, you guessed on your entry, none of that makes, it does make a difference, but none of that makes a difference in this example. What's important is that you at least know where the stock may stall in price. Because if it does break out, it's probably not going to just blow right through that. Sometimes they do, but it'll probably just stop and trade sideways around there for a little while, catch its breath, so to speak, and then maybe gear up for the next move, right? So at least you'll know ahead of time where trouble lies ahead. And to me, that's one of the big benefits of the support and resistance is when I'm in a trade that's kind of putting you in that up iffy spot, like where are we going to go, where are we going to bounce. I look for those future areas. So if I'm short, I'll realize, hey, if I get above that area, I could get squeezed. It needs to stay under this area. Or if I'm long, it needs to hold this area, and so on. So we'll let this thing play out here throughout the day. Then we'll take a look and see. Okay, so here's what I want to do just real quick. I want to pause the chart and I want to open this up. You see how the first, this is the 5-minute bar. You see how the first bar just shot up right from the open from 72.29 into 72.84, just for reference. Okay, you can see it right there, just right at the top of that. It didn't last very long, and we'll talk about that in a second. But the important thing here that you know is it bounces real quick. So at one point here, this was all green, and it looked like a breakout, right? There for a second, it looked like a breakout, and certainly there's orders on here. So people bought this stock right up here towards 72.80. When you think about this as a trader, and sometimes you have to say this out loud to yourself so you know how crazy this can be. Why would you buy a stock that bounced already? You know, if it opens up here, it's at 72, shoots to 73, it opens up $1 within a few minutes. Why would you buy this here when resistance, good resistance, is just 20 to 30 cents away? You follow what I'm saying? Because now your risk is all the way at least down in the mid 71s. I mean, you'd at least have to give this chart down into the mid 71s. Why would you buy that when resistance is so close? Again, it might work out for you, but if this kind of works out for you, you're just, in my opinion, you're instilling very bad behaviors, right? Because what this is doing is it's getting you into bad habits. It's going to come back and bite you, because it's not about how one trade works for you with the strategy. It's how 10 trades work, because nothing's perfect, as I said. But see how important that is? Why would you be willing to take that chance so early in the morning, so close into resistance, after it's already made the move? The money would be on the short. Now, you need a little bit more data to confirm that short, but you see what I'm saying? Because you're so close, it would be easier to short the stock using that resistance as a stop, because, not whether it works or not, it's because risk to reward favors you. Because at that point, you'd only have to risk 20 cents for a possible $2 to $3 washout move. So we'll kind of take a look here, see how this plays out in a few more candles. All right, now you have a little bit of red into the candle. So now it's confirming to the downside. But for this to really move down, what's this next level? I mean, there's a good chance it's probably going to try to bounce, or you're so close to the 71 here, this recent support, that there's a chance that it may bounce. So the question is, do you short it? You would want this to break down through the low of 71. If you do it now, again, same way as people did up here, buying it into the green, if you short it into the red, it might work out for you, but you need a little more confirmation. You need that official breakdown to tell you. Otherwise, this just could turn into support and then break back out. So let's give it a few minutes here, see what happens, see how it handles this level. Now, you as the trader using the support and resistance, this is a very short-term level. So it's important now that it's at that level to see the reaction. Is the stock being bought up? So far, the answer is no. Is it bouncing off of that level? So far, the answer is no. Now, the longer it stays here and the inability to bounce will lead you to think, well, people aren't interested. Traders aren't interested in buying this stock right now. It's at a pretty decent, I say decent, it's not a great support level, but it's at a pretty decent support level. That's probably why it stopped going down for a second. So it's important for us now to take a look. As you can see this thing losing, having a struggle, the balance would shift to a short position. There's a good chance, because the lack of bounce, because the lack of interest that's at this support level, just the sheer lack of buying volume that's coming into this, it most likely will lose this level. And if it does, you as the trader, let's say first you're long this stock and you're being pushed. Where if we lose this level do you think we're going to go? There's a good chance you're going to go down in here to the 68. That's a pretty far drop. So let's say you're long, it might be wise for you to stop out and take the loss. Because if it gets much lower, or it's unable to bounce here with any effectiveness, then there's a good chance you're going to go right back down into this 68. All right? And that's might be just too much of a loss for you. If you're short, and you only up a few bucks, you want to wait to see if this thing cleans out this level, which it looks like it's doing. And you want to be patient because the chances are you're going to get pretty close. Again, not 100%, but the chances are you're going to get pretty close into this level. The key here is this. You can see how support and resistance, and I hope you're kind of understanding how the support and resistance is working, right? One is it defines levels beforehand. And that's what we do as traders, is we have a lot of anxiety sometimes, right? We have a lot of anxiety because we're unsure of the decisions we're making. This allows you to put some numbers on the board that says, okay, here is that area, right? And it gives you that. Then when it gets to these areas, it gives you the second reference of judging that area. Well, how's it hanging out? How's it working? How's the stock behaving at this level? And the more you trade, you'll start to understand how important that level becomes. Again, this level that we're talking about here, it's a good support, but it's not as big as this. It's not as important as this. So judging there, as you're seeing it happen and play out in real time, you can kind of see, hey, you know what? There's not a lot of interest here. People are losing. So you as the long might want to pull the stock out. You as a short, you may want to hold. Now, as we're looking at this, and I've been talking, you've probably noticed it just flushed right down into there, into that 68.88, pretty close to your 68.54, and it bounced. I mean, you got a pretty good bounce. It grows from 68.84 to 69.89. You got a whole entire dollar, right? Would you agree that's a tradable bounce? You could have actually traded that bounce. But here, let's look at it this way. If that was your motive to trade the bounce, then you would want to be using this as well, because as it flushed deep into this level and you saw all of this selling to begin the day, you realized, hey, I'm close to a very important level. I should maybe look for an opportunity to buy. As a short, you could say, I probably would want to cover down into that important level. Again, Because it's an important level, the chances are of a bounce or a pivot there is very high. You're probably going to see a lot more action down here than you did up here because of the time. So you can see you get a little bit of a bounce. And for some of those that are the scalper, the quick day trader, I mean, there's been, while I've been talking here for 15, 20 minutes, there's been a lot of trades, right? You could have traded just that little bar right there, just that little 50 cent, 60 cent bounce. And see, you get a really nice bounce. But what I want you to take away here from this is, you know, it should not be a surprise to you, the trader. This shouldn't be a surprise. And that's what you're trying to do, is eliminate surprises. You have these levels laid out. The fact that it's bouncing here is not a surprise. So depending on your stance on this, it will help you make a decision. It will help you cut losses on a trade. It will help you maximize profits. So you can see how it works throughout this level. So I'm just going to skip out of this, and we're going to take a look back at this chart at the end of the day and see how it worked around some of these numbers. Okay, now we're back looking at the whole entire day that has been played out. I'm just going to extend the lines that I was talking about. You can just kind of look that, you know, last time we left off, you had this green bar right here. I just want to open this up just a little bit so we can take just a closer look. And it just kind of consolidated. You had a lot of bottom pivots. You know, this 68.23 ended up becoming pretty good short-term support. And then the stock makes a nice little bounce. Now, it was never able to get back up to the opening high or this 73. So, you know, as the day played out, hindsight being 2020, the stock was never really able to clear that level, at least for this day. You know, maybe tomorrow, maybe next week, maybe never, who knows. But it never really broke that level, so a really big up move was never in the cards. But you can see that when it got down into this level right here that we had talked about before the chart even started, you know, before the day started, you could accurately get within 20 to 30 cents of a predictable bounce. So you can see that this level meant something. It didn't quite hit it to the penny. Again, it doesn't have to be perfect, but it got into that level from back here. It was able to sustain that level, and there was a bounce. As I said, you got a quick bounce here. It pulled back into that level for a little bit later and held for a while, you know, held for a good 30 or 40 minutes, and then broke out of that short-term level and gave a nice little pop, eventually selling that off. And, you know, the rest of the day, it just kind of based, right? It never really got underneath of that 68 level. So the two important levels, we'll kind of break it down this way. The two important levels where the big moves were going to come from the longer term support and resistance. They never broke. And some days you're going to have that. Some days we call this range bound. This move in between here is the range of a stock, how much its range is. And once you start putting that in together with the rest of these, you'll see how this is important. But we're going to stick on topic with just support and resistance. But it shows you here how this works. And it never broke those upper areas. It really gave you that big move. But there were a lot of nice moves. There were a lot of 50-cent moves, 60-cent moves. And for you scalpers out there, short-term traders, there's a lot of money to be made on a stock like this. And because, though, when you sometimes think about it, taking 50 cents, taking 60 cents, it doesn't sound like a lot, but it does add up. The thing, though, is when your profit margins are that small, 50, 60 cents, or you're trading a stock for 50 to 60 cents, it becomes even more important for you to be very, very accurate where your entry prices are. Because if you would have shorted this stock here, you know, being short was not a bad idea. But being short here was a terrible idea, because if you were short here, you were shorting too close to a major resistance area. Now, perhaps it would have broke that. I get it. But if you keep doing that over 10 or 15 trades, that's a bad recipe. You're going to get smoked a lot. You don't want to be down in the hole. You don't short in the hole. You don't buy after a bunch of candles. Again, it might work, and times you're going to get away with it. But you don't want to be victorious about luck. You want to trade well. You want to trade clean, because over time, that's what makes you money. Getting lucky doesn't make you any money. Getting lucky puts bad habits in you, very bad habits that you may never be able to break. So you can see how important these things pivot at the level. Was never able to break. So the big move didn't happen, but there was nice little moves. So hopefully this helped you out with a little bit of support and resistance. And remember, as we move on to charts and live trades, you'll get to see how this incorporates with the rest of the strategies and just gives you that little bit of extra confidence. As if you're not sold enough, I want to show you one last example of how important this is and how much money it could save you. I understand the recent events in the market is unique. We haven't really seen this in a while, big flushes like this, but this is when our analysis means the most. If you take August 24th, Monday, in the market, big panic over China, stock market just dumps, right? And you can tell from the action here in the morning that people aren't looking at technical analysis, right? They're afraid. And that's what we're talking about, judging emotion. They're afraid. They're just hitting buttons, selling stuff, and they're not paying attention. Because yes, although it looks very, very bad, you know, the market gaps down from 197 to 186. It's down 1,000 points. Everyone's freaking out. People are tuning into financial TV shows for advice when all of the answers that you need are right here. I want to show you. We're looking at the daily chart. I want you to go all the way back to this big vital resistance area right here at 180. I mean support area, excuse me. All the way back here. Look at this. Right? The last time this thing really, you're going all the way back almost a year. So this is a very, very important number. Knowing what you know about support and resistance, how probable would a bounce be there? Why would you close a position when you were so close to major bounce area, right? And as we play this out a little bit, I'll speed it up and a couple of times faster, but you can see the difference. People are panicking. You know, they see this red, they don't know what to do, and then the market just rolls over and flushes. And people are selling positions, but they're doing so against such vital, vital areas. So if you're in a position, you're so close to support, it's worth holding. If you're a trader looking for a trade, you're talking about an incredible opportunity. So again, what you're seeing here, and look, it just comes right down into that 182, right? Very, very close. Again, it doesn't have to be perfect, but it gets down into that 182, and instantly, within a minute, this thing is already back $2 at 184. This shows you just how strong, where so many people, some people lost millions of dollars on this move that could easily been avoided by support and resistance. I think you get the point. Let's move on.